Today's video is going to talk about what an assumable mortgage is, what it takes to assume a mortgage, and if it's the right solution for you. It's no secret that rates are a lot higher today than they were just 3 or 4 years ago. Currently in mid-November of 2025, rates are hovering in the 6.25% to 6.5% range, when just a couple years ago, they were sub 3%. A lot of people might be thinking, can I just take over the seller's current mortgage? This is known as an assumable mortgage, and yes, it is possible, but today I'm going to talk to you about what it takes to get it done and why it might not be the right thing for you. The most important question is that we understand what an assumable mortgage is. An assumable mortgage is kind of exactly what it sounds like. The buyer takes over the seller's current loan. The same terms, same interest rate, same payment. Everything is the exact same. You're just transferring that loan from the seller of the property to the buyer of the property. However, it's important to understand that this is only possible under certain loan types, including FHA, VA, USDA, and maybe some other private loans. But conventional agency type financing normally isn't assumable. The other key part that a lot of people miss is this can't be done privately. You can't skip the process of still getting approved for that mortgage, and you have to let the bank know that this is your intention. The other thing a lot of people misunderstand about assumable mortgages is that they can take a lot of time. Now, if you think about it from the bank's perspective, they're not going to be incentivized to not redo that loan. They have a financial incentive to sell you on a new mortgage at a higher rate. And so there's not really an advantage to the bank for them to transfer that old loan to you. That's why these transactions can take an exorbitant amount of time to get done. It's important that if you are exploring this as an option, that you start early. Get in contact with the seller or the listing agent, find out if it's even possible, and then try to negotiate terms that make sense for you, the seller, and the bank. The second key point is, what are the biggest advantages to an assumable mortgage? The biggest draw is simple. You're getting that lower rate and, in translation, a lower payment. The other plus is that you're probably not going to have as many closing costs or loan origination fees as you would of getting a new mortgage. So that brings us to key point number 3. How do you qualify in 2025 for an assumable mortgage? The qualifications are going to be the same as getting a new mortgage. It's going to make sure that you have steady income, a verified income, a good debt to income ratio, and proof of funds for the equity difference. Be prepared to be able to apply for a loan just like you would if it was a new mortgage. This brings us to the last point of today's video. When does an assumable mortgage make sense? An assumable mortgage is going to make sense for a couple different reasons. The first one is it even possible? Does the seller have a loan that can be assumed by a new buyer? The second biggest hurdle with assumable mortgages is, do you have the cash to bring the equity gap to that deal? Meaning, say the current loan balance on the home is $200,000, but their seller is asking $500,000 for the home. This means that you'd have to bring $300,000 in cash to make that deal happen. Remember, you're assuming the exact loan that the seller has, so you can't increase the loan amount just to make the deal work. You have to bring the cash difference between what the seller is asking and the balance of their loan. Other times that it makes sense for an assumable mortgage is if the lower monthly payment can justify bringing more cash to the deal, or you want to potentially save on closing costs. For sellers, being able to sell their house with an assumable mortgage can be attractive. It can make buyers more incentivized to look at their home before they look at others. But remember, the deal still has to make sense for everyone for it to go through. It's important to know that these assumable mortgages aren't available all the time. It really depends on a lot of key factors that are outside of the control of the buyer and seller. But if you're considering looking for a home this year, it might make sense to ask the seller if they know if their mortgage is assumable. This is where you should start and how you can put together a deal that might make sense for you. If you're thinking of buying or selling a home this year, give us a call. We're happy to help.